Welcome to the Passive Income Podcast. I am your host, Dividend Dave. And thank you so much to everyone who has already been a guest on the Passive Income. You're definitely going to want to subscribe on YouTube or any of the audio platforms. I have so many upcoming incredible guests that you will not want to miss. And speaking of incredible guests, I'm going to throw it over to Kyle for a brief introduction. You can find Kyle on Twitter at Dividend Town. So, Kyle, take it away.
Hey, thanks, Dave. Name is Kyle. Been investing for about a year and a half now, and primarily oriented toward the dividend growth strategy, and just working and learning and kind of tweeting my way through that over the last year. So, pleasure to be here, Dave.
Yeah, cool, awesome. And just for the viewers, as everyone knows, I'm in Ontario, Canada, and Kyle is in, I believe you said North Carolina. So
Yep,
we will
Charlotte,
have
North
some back
Carolina.
and forth between the US and Canadian markets. And as my viewers and listeners know, that with many of the American guests, that's quite often how it works out. Just some back and forth between the differences and similarities between Canada and the US. So let's just hop right into the first sector. One of the first sectors I love to talk about, one of my favorite sectors is REITs. I have a lot in REITs. Well, I guess it's perspective what a lot is to each
Mhm.
individual. And I'm going to throw it over to you as an American. I see on Twitter Realty Income O is probably the most mentioned US REIT.
Mhm.
So I guess first thoughts on O and thoughts on the whole sector of REITs. What are your thoughts, opinions, perspectives, anything you'd like to share?
Yeah, absolutely. Yeah, I think right now O is one of I think it's the only real estate holding that I have right now, and it's a pretty small stake. I think it's about maybe 2 or 3% of the portfolio right now, and I'm frequently writing covered calls against it, and then just kind of selling them out as quick as I can. I think for the real estate sector, I probably want to spend a little bit more time digging into it. I think when I started, this investing journey about October, November of last year, it was the perfect time to believe that you could choose anything and win. Um, and since then, it's kind of one thing I really I'm kind of stressful about as I invest is am I in the right sectors, right? And
Right.
when I look across kind of the macroeconomic landscape about with where rates are, how long are rates going to be impacting the general economy. The real estate space scares me quite a bit right now. So I'm more than happy to hold on to O for the time being. Um, but when I think back to 2008, because Dave, you and I mentioned, like, we're in our mid 40s, so we've seen some things, right? We've been through
Yeah.
the 2008 crisis, and
I'm a little past my mid 40s, but that's okay.
yep. And I think in 2008, my wife is actually a bankruptcy attorney, at the time, and
Oh,
we saw some things, in 2004 to 2008, and kind of that ramp up,
yeah.
and you can see the damaging effect that, um, kind of that endless credit cycle, you know, provides, right? And then
Right.
2008, everybody was just wiped out at that point. So, I don't think we have the same risks as we did in 2008. I think, obviously the banks aren't necessarily overextended like they used to be, but at the same time, I mean, you even look around here, one look at Zillow and you see price cuts everywhere. Interest rates are what, 7%, I think it topped out this week. So from a residential perspective, I'm really, really bearish on that sector. When you think about office space too,
Right.
office space doesn't necessarily, I get a little worried about that as well. I think companies are having a harder time getting people into the office, right? And you have good economy right now, and well, I'm not going to say good economy, but the employment space, at least where I'm at, is still pretty open. So you can't necessarily utilize a lot of the space that you have effectively, and I see that at work, all the time. The kind of
Yeah.
the business standpoint, I don't feel good about that. And one thing I do want to look into a little bit more, and I kind of looked at this maybe a year ago, was like not hospitality, but like there's one called CTRE. I think it's Care Trust, right, where it's kind of like a
Hmm.
REIT centered around more 55 and older, right? And you kind of look
Right.
at the generational aspect, around the states and North America, and that seems like it's got a lot of potential. But I just need to study that space a little bit more. But
Yeah.
overall,
So
I'm pretty bearish on the sector right now.
okay, fair enough. I do have. So I guess one probably my favorite REIT that most of my viewers and listeners would know that I mention on all the time is RioCan. It's one of the
Hmm.
Canadian favorites. They have several properties across Canada where they have basically huge. It's not a shopping mall and it's not a strip mall. They're more just
Right.
complexes the size of say 3 or 4 football fields,
Hmm.
maybe even bigger, that have all sorts of retail stores, restaurants, Home Depots. I in the one somewhat near me, Home Depot is one of their anchor stores.
Right.
So RioCan is a very movie theaters as well, like just sort of this
Hmm.
wide array that brings a lot of people to their properties, and they have, like I said, these businesses that people go to, whether it's a Home Depot or the movie theater or other chain retail stores in
Hmm.
that giant complex. Um, moving like the next one I was going to mention is another dividend Twitter is Northwest Healthcare,
Hmm.
and that's sort of uh, comparing to the one you mentioned, the care. So Northwest Healthcare is a REIT, but it is basic. It's also it covers 2 sectors at once because it's a REIT, but it's also into healthcare, owning buildings that are, whether they're hospitals or doctors' offices or whatever they happen to own, right?
Hmm.
So I like that one for that reason. You're killing 2 birds with 1 stone, so to speak, in those 2
Exactly.
sectors. And there's
Hmm.
actually a couple other REITs I think in my portfolio, Extendicare or Extended, I think it's called Extendicare, which is
Hmm.
kind of similar. It's not as popular as the Northwest Healthcare, which, like I said, you've probably seen on Dividend Twitter because I'm
Hmm.
sure I probably follow some other Canadians. It's quite the eclectic mix on Dividend Twitter between Canadians and
Yes.
Americans, and there's a few Brits in there as well. So it's definitely a fun time.
Yep.
And I definitely don't like, if you're bearish on REITs, that's your prerogative, that's your
Hmm.
perspective, and that's exactly what this podcast is about. Just, not financial advice, just people discussing their thoughts, opinions, ideas, and hopefully some of the viewers and listeners can take something positive from the conversation.
Hmm. Absolutely.
Moving along to another one of well, they're all my favorite sectors. The energy sector. The energy sector, I guess. There's obviously lots going on there. There's lots of things happening in Europe. Obviously, the
Mhm.
Russia-Ukraine war is affecting energy prices in all of Europe, which is
Mhm.
somehow affecting prices in North America as well. But what are your thoughts on the energy sector as a whole?
Yeah, it's funny. That's one of the sections that I've never quite fully understood. When I started,
Oh, we're having some difficulty with your audio again.
oh no, here, let me plug in my other thing. How does that work? Is that any
Yeah,
better?
we're having some. I'm not sure. I think we're having a little bit of difficulty with both your audio and video.
Oh no. Okay. Let's see. Let me see.
Okay, I think we've
Are we
got you
better?
back.
Okay, sorry about that. Um, Yeah, I think for the energy sector, I've never quite studied that one extensively. I did have some money in some master limited partnerships. I think MMP was the big one that I had a while ago. I had some Chevron as well.
Yep.
And I think you could see the commodity prices continue to rise. I think where I get worried, like just kind of thinking like in the short and medium term, we've seen oil on a tear lately. I just don't know how much longer that goes on. Right? When I think about
Right.
obviously there's challenges in Europe, right? And the Nord Stream 2 pipeline is going to impact some of that, and it's going to drive up prices, strategic reserve release. I mean, it's kind of like a cat's bag of um, what's the flavor of the day kind of impacting like which is the general direction it's going to go for the next 3 months.
Right.
And I think for me, like when I think about that sector from an income based standpoint, um, the pipelines seem appealing to me,
Yep.
but I need to study that like a little bit more. As far as like the energy companies themselves, where I get worried about that is if we head into some type of recession, which I think is probably the odds of that are favorable, like in my
It's
humble
probable.
opinion. It's probable. We'll say that, right? I think the energy usage starts going down. Costs are going to go down as a result, and I don't know what that means from an energy company perspective, right? I
Yeah.
mean, do you start seeing like, do you see the war in the Ukraine, start to clear up? Do you see Nord Stream, open up? I don't know. So as far as like, my experience in that area is just, you combine that with kind of the riskiness of like what's going on in the situation. I'm just really nervous about that,
Yeah. Fair
and I
enough.
yeah, and I think for me, I part of my mo is as I kind of invest my money. Like there was a phase where I kind of I threw myself into the dividend growth strategy, which I still love. I absolutely love,
Yep.
and I'm
It's a winning
want
strategy over the long term. We all know
over
this,
the
right?
long term. Exactly. But with the benefit of hindsight from 2008, right, and all the risk and the headwinds that we see right now, um, one thing I think about like every day and night is capital preservation first, and then risk. So
Right.
if I don't necessarily understand it, or feel like it's a solid bet, I'm probably not going to throw any money at it at that point. So the energy sector for me, besides the pipelines, which look interesting, I'm probably pretty far away from those at this point.
Yeah. Fair enough. Fair enough. I think the only two in my portfolio are Suncor and Algonquin Power.
Hmm.
They are Canadian
Yeah.
companies. They I buy them through the TSX, the Toronto Stock Exchange. I'm
Hmm.
quite sure they're both available in New York as well.
Yes, I've heard of Algonquin Power. I need to look at that as well.
Yeah, they're both good companies. And again,
Yes,
not financial advice. It's just
not
you guys
financial
having a
advice.
discussion.
That's right.
But no, I do like them. They're good companies. They both
Hmm.
pay a nice healthy quarterly dividend. And that's really what I'm in it for is getting companies that I don't work for to basically getting companies to pay me to not work for them, right? That's what I want.
Exactly.
Right?
Yep. Absolutely.
Moving on to another sector, banks, and I'm guessing do you follow Dividend John on Twitter?
I don't know.
Johnny Boy?
John, I don't know. Shall I look? Let me see.
Oh, your audio again. What's going on with
Oh
your
no,
audio?
I don't know. It's been good all day. Let me. How about now? Is it any better?
Yeah, you're a little bit. Let's just
I'm a
try to
little bit
give this a
fuzzy.
second.
Okay.
I'm hoping you come back there. I think you're back.
Okay. Am I back? Sorry about that.
Maybe not.
Oh no.
It's okay. No.
I'm sorry.
Okay,
Let's
folks, just bear with us while we try to get Kyle's connection restored.
Yeah. Sorry about that.
Are you seeing and hearing me okay?
Oh yeah, you sound great. You sound great. It's just me, huh?
Okay, I think you're back. I'm not sure. You're
Okay.
just having a little bit of ins and
Yeah. Sorry.
outs.
Sorry about that.
It's okay. So I'm not. If you don't follow Dividend John at Johnny Boy, there's some numbers, but you really should. He tweeted today that, and this is a shout out and congratulations to you, John, that he achieved the milestone of $65,000 in passive income with a dividend payout today from one of his banking positions.
Oh wow.
Yeah, that's pretty good. And I know from his past tweets, he's Canadian as well, and so he holds,
Yeah.
I think, all of the Canadian banks. I'm sure of
Hmm.
most of them, and he's been in. I've seen his tweets where he said he's been doing this for 20 years, so it's like over again the long term, 20 years. He's built up
Hmm.
these positions, and yeah, he's to the point now where he's making more money in passive income than the majority of people make in an annual salary.
That's awesome.
Yeah, great for him.
Kudos for him. Yeah.
So sorry, I was trying to get into the banking sector, but I also definitely wanted to mention that tweet today from him because obviously that's a an amazing milestone. But thoughts on banks? Have you watched any of the Canadian banks? I'm sure you know how strong the Canadian banks are. Or any thoughts on the U.S. banks, the J.P. Morgans and the Wells Fargo's and et cetera, Bank of America, et cetera.
Yeah, I actually have a couple of them like right down the street from me. So yeah, it's Bank of America's practically my neighbor. Yeah,
Right,
I think as far as the banking stocks, I defer to you on this one. I've traditionally I think I was invested at T Rowe Price for a little bit, and I'm trying to think. There was one other, but I've divested from those. From the banking perspective, that's a little bit like energy for me right now, where it's a piece of the business I don't quite understand as well as I should. I know like
right.
XLF. If I was to put some money into anything just from a sector rotation standpoint, XLF would be my choice. I think when I think about regional banks right now,
Mhm.
um, you know, I, I just don't. I don't. Is it different in Canada than it is in the U.S.? I'm
Yes.
curious about that. Yeah, because here you have tons of regional banks. You got banks in the grocery stores. I mean, they're on every street corner around here.
Yeah.
How is it in Ontario?
So, I'm gonna go back to the US first for a second. So,
Yeah.
in the US, you do still have your really big banks like your JP Morgans, your Bank of America, your Wells Fargo, and whatever other ones are your really big banks. And
Hmm.
then what I've learned just from having other, American guests on this podcast is you have every single state has their own, like, the First Bank of
Yes.
Wisconsin or the First Bank of Nebraska or the First Bank of Texas or
Yes.
the First Bank of California, and I could name 46 other states.
Right.
So, in Canada, what we have is called the Big 5, being
Hmm.
Royal Bank, Bank of Montreal, Bank of Nova Scotia, CIBC, which is Canadian Imperial Bank of Commerce, and
Hmm.
TD, Toronto Dominion. I think I named all 5 of them.
Right.
And those are all very strong banks, and if you see any of those, and I'm sure you will or have seen them on Twitter, about how, like, they've been around for over 200 years,
Right.
all 5 of them are coming up. All 5 of them have been paying dividends for over 150 years. A
Right.
couple of them are coming up on their 200-year anniversary of paying dividends. So
Hmm.
they're extremely strong in that regard. To answer your question, though, yes, we do have some regional banks, but
Hmm.
not very many. There's
Okay.
National Bank, Canadian Western Bank. Um, in Quebec, there's one called Caisse Populaire, which is French
Hmm.
en français. And then there are a few other regional uh, banks. There are a lot of credit unions, but credit
Yes.
unions they're obviously they're kind of like banks, but I'd consider them something of a separate entity than the
Mhm.
banks. And again, this is going back because those big five banks are so strong and control so much of the financial market in Canada.
Right, right.
I'm not sure if that answered your question or if I just went off on a tangent.
No, no, I think it's helpful for me because I've seen a lot of that, and then I've seen them posting like earlier in this year, about their longevity and their yields and how good they are.
Right,
And I think as the dollar remains fairly strong, it might not. I don't know when that's going to top out. I don't think anybody does, but it might not hurt to get into the right level of international exposure at some
right.
point here. So yeah, especially banks. It just depends. I'm not quite sure. I still think back to 2008 when I you're gonna laugh, but my one of my friends in 2008, he was like, "Oh, the stock market's going down. Bank of America is a great investment." And I was like, "Oh, really? That sounds great. I'll take $500 and buy some stock, right?" And
Yeah.
I did that only to see it like wiped out like by about 70%, if I remember. And I still remember to this day. I was like, I'm never invested in a bank again.
But
And
if you had a held that from 2008 to now, how much more would that $500 be worth? Because I'm sure
probably,
I can guarantee you Bank of America
yeah.
rebounded, and you would
Well,
would have been getting dividends for 15 years.
exactly, but back in 2008, I didn't quite know what I was doing,
Right.
to be fair. So, but yeah, it depends. I think as we do we go into a recession? Do we not? Right, and that's kind of the thing. And I keep hearing like horror stories of like Ally Bank over here, kind of up to their skis and like auto loans and things like that, right? And you kind of see the prices of used cars just declining faster
Yeah.
than the loan is worth, right? And I just I sound like a worry wart, with a lot of these sectors, but like when it comes to the banking um, piece, I think what I'm primarily going to watch out before I kind of dip my toe in the water of that is. Are they well capitalized, right? Where's the debt write-offs look like? Are they
Yeah.
starting to escalate? Personal spending, like that probably impacts a lot of the bigger banks, not necessarily the regional ones. But I think I'm going to take a wait and see approach to that.
Right.
But yeah, typically I think maybe as we come out of a recession, if we get into one, or maybe just start seeing like some kind of trough or something like that,
Yeah.
then maybe it might be a good time for me to, kind of stick my toe in the water there. But I think for now, the the three sectors you picked are probably the ones where, like just personally, I think I would just tend to avoid.
Okay. Fair
Yeah,
enough.
yeah, yeah. But that's just my non-investment opinion, right?
So the only exposure I have to the Canadian bank so far is
Mhm,
actually just in one, maybe a couple ETFs,
mhm,
but I do plan on buying some of them outright for a few reasons. I do want to go
mhm.
back to you've brought up 2008 several times now. The
Yes.
Canadian market, the Canadian banks especially, were
Mhm.
much better positioned to deal with 2008
Yes.
than the US banks were. The US banks were you've probably seen the movie The Big Short that explains sort of they were just giving mortgages to everybody and their
Anybody.
dog,
Oh, yeah.
and the Canadian banks were much better positioned that the mortgages that they had or were holding
Yeah.
were stronger, like people that could afford the mortgage. Whereas, like in 2008, or like you said, leading up to 2008, that movie, The Big Short, really explains how there was so many people that were given mortgages, but in reality, they could not afford them.
Yes.
So, which obviously led to the housing crisis, the financial crash, everything. So that's why Canada fared much better in
Right.
2008, 2009. Obviously, the Canadian market and the US market are extremely close and tied to each other.
Hmm.
but we did fare much better through those few years than the US did for that for that exact reason. You
Yeah.
also mentioned how the dollar was strong. You're obviously referring to the US dollar.
Yes, that is correct. Yes. Thank you for the correction.
It's not a correction, just pointing it out that you're referring to the
Yes.
right, and you're correct. The US dollar is strong right now. The Canadian dollar is mm, has been a lot stronger, and actually going back to 2008 because
Yes.
I I think it was more leading up to 2008, somewhere in that, '06, '07. The Canadian dollar was actually worth more than the US dollar
Yes.
for about a year because the
Yes.
writing was on the wall of what was about to happen in the US.
That's correct. Yeah,
Yeah.
I remember that. That made headlines over here, even though probably at the time I didn't quite understand it
Yeah.
as well as I should.
Well, and that was the first time since the '70s, the oil crisis of the '70s when the Canadian dollar was stronger than the US, like so, I mean, it
Right.
does happen, but it happens, like,
Yes,
once every 40 years kinda thing. So,
that's right.
we'll see if we're still investing and in the markets in what, 2046 or 2047 if, if Canada takes another run up above the US dollar.
I feel good about that. Like I'm rooting
Yeah.
for you, Dave.
So since I've struck out on sectors of what you wanna talk about, why don't you pick a sector?
I mean, what I really like the healthcare sector right now and
Yep.
consumer discretionary. And I think although I don't have much money in it right now, like I said, I'm just kind of keeping my eyes peeled, and I will be adding to the portfolio shortly. Kimberly Clark is actually one of the ones that I own right now. Kimberly Clark, Merck. I did have Johnson and Johnson that got taken away. They got assigned by a covered call recently. I think the growth in some of the healthcare stocks has been a bit of a rocket ship in the last like 2 weeks. I've been surprised by that myself.
Yeah.
Um, just some of the bigger names, and as I kind of start looking, where do I kind of put the cash, right? Um, I really want to understand, like, what is the debt ratio exposure, like, how much how much are we paying on interest, right?
Yeah.
What does the free cash flow look like? And I'm going to look for big companies that are kind of able to weather the storm in the next, like, 6 to 12 months, right?
Mhm.
And so even if there's no um even if there's no gains or anything like that, at least I feel comfortable that 20 years later they're still going to be around, and I'll get some
Yep.
nominal dividend and increases from that. So I'm going to be spending some time on that. I did own Kroger at one point. I'm looking to get back into that again. I've seen it fluctuate between like $40 and $60.
Right.
That's one of the local chains over here.
Yep.
That's been pretty solid performer. From my seat. Um, the other ones I had Coke at one point. I'm going to get back into that soon too. Pepsi is obviously a good one. Um, just I think a lot of these companies can cover themselves with enormous pricing power.
Right.
And they don't necessarily have to worry about um, you know, debt obligations as much as like some of the smaller shops. So and just as I think about, like, how to kind of construct the portfolio in Q3, or I'm sorry, Q4. um, it's going to be very very low beta, very very stable. Obviously growing yields. I definitely want dividend growth in there.
Yep.
um, but it's something I can kind of take my eyes off of, things for the next maybe year and a half. And I think where I was particularly rattled, like, earlier this year, was your stalwarts, like, Target, for instance, got rocked to the tune of about, like, 15% drop in a day because of inventory buildups and things like that.
Right.
So even some of the names that I thought were safer, were not, right. And so, kind of as I think to as I think about, like, how do I structure this in the next, like, couple months? Do you Do you do like, somebody, I heard somebody say that, I like this idea, like, you go long Walmart, short
Yeah.
Target, right? Because, Target is where you go when want to shop. Walmart's where you go when you need to shop. And,
Right.
that kind of stuck with me. I was like, that's
Yeah.
pretty smart, right? Costco is probably one of the bigger ones that I like,
Yeah.
over here. Every it's a bit of anecdotal evidence to me, but like, the local, Costco over here, you go in, it's still an absolute zoo every time you go in, right?
Yep.
And are you starting to see, folks accumulate a little bit more bulk, as prices rise at the grocery store. I think I heard Costco is actually having memberships go up. So, they trade at a pretty high, PE ratio, but
And
I
pay a
think
nice dividend.
they pay a nice dividend. But you
Both
you,
of them,
you
I
get the
believe.
Yep, but you get the opportunity for like strong growth from that as well. So, that mirrors is kind of like an oddball kind of growth stock and dividend growth stock, and
Right.
I think that's something that I feel good about. The other one, you just like how I'm kind of structuring my thought process is, where do you have to go, not necessarily where do you need to go.
Yes.
Dollar General. I was looking at Dollar General. I have some dollars, and I'll probably be adding to that, in the same
Yeah.
context as the Walmart argument that I just talked about. But there's a lot of good opportunities, in kind of those. I'm not going to say retail, but more consumer staples, sectors, right?
Right.
And then the other thing that I kind of, I've been dipping my toe in the water on, short-term treasuries recently too. I just wrote it down a little bit earlier, but the 2-year yield is, 4.4, 10-year yield is 4%. And while those, yields have been going up and the price is down, I have no idea where that's going to stop.
Right.
The thought about, I'm really thinking about, do you want to put your money in, a dividend growth stock, or do you take the sure bet of 4.4% over 2 years? And so I think there's just, for those of us who are pretty cautious about kind of investing like their capital, there's a lot of tough decisions to make, um, just given the macroeconomic environment. And
Yes.
for me, I tend to hold a lot in cash right now, and I'm gonna
Yeah.
stay there. But I have been adding back over the last, like, 6 weeks, in certain areas. It's
So
just
I have a lot
Mhm.
to unpack here, what you've just
Yeah,
said in the
yeah,
last few
yeah.
minutes.
Sorry.
It's okay. No, it's great. I'm just sitting here trying to remember everything to touch back on. So we kinda started out there with healthcare and then went into
Mhm.
consumer staples, which is fine, which is good. Um, I guess first with healthcare, we're at the age where we're looking at the aging population, our parents, baby boomers. We're looking at that healthcare, thinking healthcare is a
Yes.
great sector. I don't disagree with you. Um, and then jumping into Walmart and consumer staples, I actually had another guest on recently where we were saying, again, going back to something that covers two sectors. Well, there's the pharmacy in Walmart, and
Yes.
probably several Costco's have pharmacies as well. I don't go into Costco nearly as much. Um,
Mhm.
but the you've got that store that's covering those 2 sectors of the consumer staples, grocery, and the healthcare sector.
Mhm.
On a personal level, you're right, like, I go to Walmart to do my grocery shopping 99% of the time. Sometimes I'll, like,
Mhm.
happen to be closer to another store and just go in there, but I
Right.
kinda make it my mission to be at Walmart at 8 o'clock on Sunday morning when I know it's not gonna be a zoo, right?
Yep.
8 o'clock
Yep.
Sunday morning is the time to go to Walmart, by the way, and it's still busy, but it's not,
Yep.
like you said, a zoo.
That's right.
Yeah, so, those were the 2 points I remembered making remembered to make.
Yeah. No, I think you got him. I think, yeah, as I think about those sectors in particular, I have a little screener over here that I use. There obviously some names float to the top, like even of the healthcare. I'm looking at, Agilent, Eli Lilly, United Healthcare,
Right.
all fine companies. I think. what I want to do is just kind of look at their size and scope, and some free cash flow. Understand, are they going to be able to weather the storm? But like in those sectors, I think just generally, they're just going to be a little bit safer probably in the next in the
Definitely,
next six to
like you
12 months.
said, people
Hmm.
have to eat, and that's why I'm big on consumer staples and not like I own a few different food related. I'm also biased. I work in the food industry, so I'm biased
Oh
to the
yeah.
food industry a little bit. But I
Hmm.
also understand that people have to eat every single day. I do
Yep.
own one of my, I guess, medium sized positions in my portfolio is a company called Rogers Sugar, and
Hmm.
they pay a nice, healthy quarterly dividend. But you just think about the amount of sugar that goes into everything like that. They're a strong company simply because
Yeah,
sugar, right? Like
that's right.
sugar.
Especially for us Americans.
Yeah. I own another one called Pizza Pizza. They're a Canadian-based chain, so
Mhm.
they compete basically with your Pizza Huts and Domino's and Little
Yes.
Caesars. But I like them because, again, they pay a nice healthy monthly dividend. They're positioned in that market with the other chains I just mentioned, and people are gonna eat pizza. Whether it's a
That's right.
recession or not, people have to eat every day, and they're not gonna cook every single night through a recession. They're still
Hmm.
gonna get that pizza on, say, Friday night or Saturday night or Monday night or whatever day of the week. There's
It's a
people buying
Sunday night
pizza.
treat over here, like every
Yeah.
Sunday almost.
Oh, yeah, so and I do own another one in the food sector, but it's more of um the company owns, chain restaurants,
Mhm.
which I bought not necessarily in the middle of the pandemic, but at some point in the pandemic, and I was thinking to myself, "Am I dumb?" Right? Like, is this the worst time to be buying restaurants? But no, I'm happy
It
with it.
probably
Like,
worked out
again, they
well.
pay a nice healthy monthly dividend, and I'm not disappointed in its performance, so,
I'm sure. I'm sure as we've seen people kind of flood back, it's
yeah,
probably done pretty well.
yeah, so those are my thoughts on
Mhm.
consumer staples, a little bit more crossover with the healthcare again, with the pharmacies.
Yeah.
I was gonna go back to the healthcare as well. I don't own it yet, but I keep joking about it because we're talking about our age and our 40s and
Mhm.
our parents being, you know obviously our parents are baby boomers with us in our
Yep.
40s. Um, so there's this one on the TSX called Chartwell, and they basically have retirement homes, so long-term care and
Oh
retirement
yeah.
homes across
Yeah.
Canada. It's another REIT, but I
Yeah.
keep joking that I need to buy it before I need to move in there.
I own this place.
Yeah, yeah, right?
That's
Oh, I'm
right.
laughing about it now, but in 20 years.
Exactly. Exactly. I'm gonna remind you to buy that next week. Okay.
Yeah, yeah. It's been on my watch list, like, forever, forever and a day. It's always been there on my watch list. I've just never pulled the trigger on even buying 1 share of it. I should just do it just so I can say I own 1 share of it.
If you build up your income on that one enough, then that will pay for your monthly rent to go in there, right? So that's
Yeah.
that's the
Well, did you
goal.
see my did you actually see my tweet today? I was actually responding to another tweet, but I was like, "Invest in your phone company, let them pay your phone bill. Invest in your bank, let
Yeah,
them pay your mortgage. Invest in energy, let them put gas in your car. Invest
yeah,
in a grocery store, let them
that's
buy
right.
your food," right? I don't know if you saw that tweet or not, but, yeah, it was that's the idea. If you can invest
Yep.
in everything that you use and let them pay you a monthly or quarterly dividend, it's like well, the reply to the tweet from the person it was actually, the Alpha Thought,
Hmm.
I believe, Dividend Dominator, I believe is the name on Twitter,
Hmm.
and his reply was, "Yeah, turn the cash register around or put yourself on the other side of the cash register," and it's like, "Yes," right? Like, it makes total sense to invest in the companies that you use.
Yeah, it does, and I think for me as I kind of started like this journey, I don't know. Have you ever seen Furtis on DivGrow before?
I don't think so.
he's not on Twitter, but he's got a website called divgrow.com, and he's basically been tracking like his dividend purchases. I think starting back to, I think it was 2008 or 9 or something like that.
Yeah.
And it's amazing because I think, I'll run full circle with this, but
Yeah. Go for it.
what he did was, he basically charted this out like each week, each month, right? Here's what I'm buying, here's the strategy, and what's really cool is, I just didn't discover this till last year, but there's a chart there and it shows every week, and you can go back all the way till the beginning of, like, when he started with an initial like $10,000 investment. The last time I looked at it, it was like, 1.3 million or something like that.
Hmm.
Um, but that's what really turned me on to kind of the space where, you look at like what he did, where it's just that drip, 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 right? And
Long-term growth and like dividend
yep,
growth, and pay yourself first, invest whatever it is,
yeah,
$100 a month or 500, whatever you can afford to invest per month,
yep,
and just
exactly.
watch it grow. Because from 2008 to 2022, it's 14 years,
It's a good
almost
run.
15 years. We're almost to the end of 2022,
Yep,
and yeah, if you're doing that religiously every month,
yep,
dripping dividend reinvestment plan. I'm sure all of our listeners know that. But if you're just reinvesting all of the dividends that you're being paid for 15 years plus whatever else you can
yep,
throw into that account, and just basically keep buying more passive income, yeah, it's definitely going to snowball it. That you start it with a little tiny snowball, and as you keep
yep.
rolling down the mountain, that snowball is going to get pretty freaking big.
Yep. And I think the one thing that stuck out to me kind of as you actually chart it out and you watch it, a lot of the names that he owns, and a lot of names you and I are talking about right now are names that are very that you're very familiar with, right? And
Right.
it's one of those things where you go look around your house, right?
Yeah.
Oh, here's an iPhone, right? What
I love
what
that
do they pay?
example.
Like, and you just start looking and you start paying attention, right? And oh, there's the thing of band-aids in the cabinet, oh, Johnson and Johnson,
Yeah.
right? And then, as you start kind of looking through their financial statements, like, to me, it's a twofold benefit. One, you can look around your house, figure out like what you own, and you'll probably find some stuff that ties back to companies that understand, that they have to run a pretty, solid and consistent business model to actually be able to pay those dividends
Right.
consistently and grow as a result.
Right,
Um,
and that's what I love
and
about uh,
yep,
dividend companies is, if they can afford to both pay the dividend and grow the dividend, they're a
yes,
solid company. Going back
exactly.
to your, about look around your house, this literally happened to me just, I don't know, 2, maybe 3 mornings ago. I'm
Hmm.
brushing my teeth, or I was about to brush my teeth, and it was at the point where you had to, like, squeeze the toothpaste and roll up the tube, right?
Yep,
And so I was rolling up the tube of toothpaste to get all the stuff from the bottom, like, how you do to roll up it to get more out. And I just happened to turn the toothpaste over, and what do I see? P&G, Procter and Gamble. So, like,
yep,
prime example
exactly.
of just companies that are in your house that you don't even think about, but they're there.
Yes, exactly, exactly. And the more I kind of looked at, some of those, stocks and equities that, he owned, it's stuff that you and I, like, would recognize immediately,
Yeah,
right? And for anybody that's not, a dividend growth investor, right? It's some people may disagree with me here, but it's not particularly hard, right?
I'd
You
agree.
look, yeah, you look at a historical statement, right? Or a financial statement. Look at it over the last couple of years, right? Number one, do they have dividend growth, right? Are they growing? Are they growing their dividend, right? Consistently, over 5, 10, all the way to 50 years, right? Number two, what's that dividend as a percentage of earnings, right? Or
Yeah,
some similar metric, right? and three, are they a growth oriented company, right? And you kind of tick the boxes on those things, right? And you'll
Yeah.
find that like you narrow the scope of wild and crazy companies that, are free cash flow negative, or, are, consistently, their op income's negative, or, they got margin like, and you just narrow it down, and it's so much easier to find like the good quality. And, even if you're not like a professional, investor or something like that, it just makes like the research that much easier, right? I mean, to your point, right? You look at it and you go, oh, there's my toothpaste, right? Who's my toothpaste company?
Yeah.
They've been here for 80 years. You can look at every trend they have, over the course of like the last 20, and it looks like this. And you don't too deep in the weeds at that point, right? You can feel
No,
pretty
I
comfortable.
agree 100%. Like, yeah, I agree 100% with you. So I do have one question that I've been meaning to ask you ever since you said on when we've started DMing to try to arrange
Yeah.
this time to record. And you just mentioned that you are have a larger position in cash more or less right now, which
I
is
do.
always good to have some cash. So when you do see an opportunity, you can take advantage of that opportunity. But I guess my question is is now not the opportunity? Like everything is on sale.
Yeah, yes, like I think for me, I've been layering into short-term treasuries, right? Anywhere from like 3 month to 2 year yield. SGov right now is probably one of my bigger positions, and that does a lot of it for it, right? It pays a little trickle of income like each month,
Right.
but that does a lot of the investing. And then I started dabbling in actually buying some of the treasuries, right? And I think that's probably about like 20 to 25% of my portfolio. I mean, listen, you're right. I mean, we've seen, stock market's off its highs. I think the Nasdaq was down, anywhere from 20 to 30%, depending on where it ended today, like over the
Yeah.
course of the year. I think it's been, hit quite a bit. I think where my position is, just from like kind of a macro standpoint, there's, maybe I'm violating some dividend growth rules by saying this, but like, I do believe that the volatility, kind of in the market, is going to continue. So, at this point, that's why I'm kind of in the safer treasuries right now.
Yeah.
And as those kind of, roll over, right? I mean, I can always sell the bonds, or I can, get out of them, or they'll be rolling out like, over the next, year or so. I think depending on where things go from there, that's probably where I'll be adding back in, right? To your point, like I could pick it on a dartboard, and over 20 years is going to be good, probably, right? So am I doing a little bit of bottom timing? Maybe a little bit, but
Trying, right?
yeah, just trying. And like I may be violating some rules with that. But to
Well,
me, that's I think one of the most important things. Like every investor is different.
yes, for sure.
The one thing I've learned is there are no like right or wrong rules. There's a set of guidelines, right? And if I was 25 and doing this, knowing what I know now, I would be neck deep in some dividend growth stocks. But
Yeah.
considering that, like there's just been a bit of a rocky boat right now. And I still don't think we've seen the fallout from inflation and interest rates kind of drag its way through the economy. I'm making by keeping it more in cash and short-term treasuries, I'm making a bet that the worst we the a little bit more pain is ahead. you know
Yeah, so to your point there, like inflation has been killing everyone. Every
yeah,
on the consumer level, inflation
yeah,
is like it's hitting home like everywhere, whether it's at the grocery store, at the gas station. Every bill that I have seems to the company has
yeah,
seemed to raise like everything is the price of everything has gone up across the board. And actually,
yeah.
like I mentioned earlier, I work in the food industry. I'm actually a purchaser in the food industry. So I've
Oh
been
yeah,
watching these price increases coming for the last 2 years, knowing that they
yeah,
were gonna hit really hard when it got to the consumer, and it has.
yes, yeah.
So that's my mini rant about inflation, I guess.
Yeah. Well, let me, if you're a purchaser in the food industry, in one of my recent jobs, I did, purchasing finance. And from 2020, right around, let's say the beginning of 2021, before the general public started feeling like, the pressure,
Yeah,
right? And I'm sure you saw this as well. The cost of
100%.
everything started going up: steel, lumber,
110%.
plastics, right? And if I remember correctly, it was around March of 2021, and I'm sitting here looking at my numbers, and I'm like, I clearly did something wrong because this can't be right. And sure enough, like, 3 or 4 months later, you could start it seeing to hit like the general public. And I
Yeah,
remember the company I was with at the time, one of the first things that we did was, okay, well, how do we price this out, right? And that's what every company has gotten really, really good at in the last 2 years, right? And how much longer, are they going to be able to, increase price, at the expense of the consumer, instead of, maybe thinking about, improving efficiencies on the back end, right? I mean,
right.
price is such an easy lever to pull, especially in the last, like, year and a half. I don't think you've seen a lot of, the companies trying to get really, really efficient at things, as they've ramped up from kind of pre-pandemic, right?
Right.
And I just think, like, it's going to turn into a game of who's going to give their margin first, right? Like, if you
Yes.
think about, you got the cost of everything going up, you got wages going up. You're going to start to get to a point where you're going to tap out consumers, or businesses are going to start to bulk. And at that point, if you're not going to get it at a price, where are you going to get it, right? You're going to get it out of either labor or margin, right? Or, some other, there's only so many places like that kind of spigot can drain, right? So I think,
Yes.
from that, and that's kind of a high level narrative of where I think, there's still a little bit more pain, to come. And I think one of the things that I posted today, I can't remember, somebody else posted it, but it's a great post, and it talks about, like, kind of the, the recessionary cycle, and it goes hope, right? Which is, housing is the first thing to go, then open
Yeah.
orders, right? Then, oh, what was it? I think it was pricing, and then employment, right? So those kind of things happen in a particular order during a downturn, and I don't think we've seen much of the employment side, right? So until
No.
I start seeing like that kind of,
That's what's made this an extremely weird
yeah,
if we are in or going into a recession, this
yeah,
is the first time where there's been a labor shortage during a recession. Usually
yeah,
people screaming looking for jobs.
exactly.
Companies can't hire enough people right now. I do
That's right.
wanna, um, back up to, like I said, in my, uh, life working 9 to 5 as a purchaser in the food industry, I also
Yeah,
do all the purchasing of the packaging and all the maintenance parts as well for like, I basically purchase everything for the plant. And so,
yeah,
yeah, I've seen the prices go up across the board, whether it's the actual food ingredients that we use or
yep,
like, labels, corrugated cardboard,
yep.
paperboard, like any kind of packaging. Um, we're actually a cannery, so the price of
Hmm.
cans at the
Ooh,
start of 2021, sorry, at the start of 2022, the price of cans increased by 60%. So
yeah,
that's a
yeah,
major increase. Like a
yep.
truckload of empty cans used to cost, I want to say in 2021, they cost roughly 22 to 23,000 US
Yep,
dollars.
yep.
We import them from the US, and I, starting 2022, that increase went from 22 or $24,000 to $40,000.
Oof. And that
So you
does
can
that
just
include
see.
freight too? Like, the freight
Yeah,
aspect of it
that's
was
included. Well, and there's a whole other animal to unpack, the cost of
right,
freight over the last 2 years, right?
right.
Unreal, unreal. It's starting to come back down to more reasonable levels now, but
Yes, yes.
yeah, no, that's freight included on that one. The vendor actually does the takes care of the shipping.
Right.
Obviously, the shipping is still buried in the price there somewhere, but
That's right.
when you see that increase, though from the manufacturing perspective, and that's just one product. Like I said,
Yes.
everything across the board, the price increase. So I've been sitting there at the purchasing desk watching this cut, basically watching inflation rearing its ugly head,
Yes.
knowing full well it's coming. I'm like, this can't. the middlemen, like the manufacturing plants and whoever else is in between, can't
Yeah.
sustain this forever. So eventually, this has to get passed on to the customer.
Yes.
Who to us is the retailer, and then the retailer has to pass
Yes.
it on to the end consumer, right? Like that's just the way it
Yes.
works. And
Yes.
yeah, like I said, I it was no surprise to me when say 6 or 8 months ago, radio and TV news, all the business news started talking about
Right.
inflation, and I was just like,
Saw that
"Hey,"
coming.
I was like, "About time, guys."
Yeah, yeah. But it's to your point. Like if I think if I was not like associated with like any kind of procurement organization, I would have never believed that like the bills coming across the desk were real. Like, and I'm
Right.
sure you feel very similar because the pace it came and kind of the intensity as it happened um, was was ridiculous, right? And
Yeah.
now you get to a point where like just personally, it's kind of like the boiling frog syndrome, right?
Yeah.
At first everybody was like, "No, we're not going to accept these prices," right? And then you come back and you're like, "Well, no, seriously, things are going up," and nobody believes you. And then you get pressure from everywhere, and then at that point, people tend to accept the price increases because they go, "Oh, yeah, I'll just price this out myself," right?
Yeah.
So it creates this kind of like um, endless loop, so to speak,
Oh, we have
where
a
it
visitor.
just, oh, I do have a visitor. Oh, hang on. Okay. Okay.
W We'll wrap up here
No,
real soon. I do appreciate your time.
no, of course. But it's funny because it would just go on and at some point, like you, me, like our neighbors, they get tapped out. Like there's only so much from a wage perspective we can handle, right?
Yeah.
And it's just you wonder, are we getting to that point right now? And that's kind of for me, that's kind of the inflection point. Like I kind of need to see a little bit of resolve, something resolve. I think before I start to think that things are gonna trend a little bit more upwards. But
I'm gonna
that's
give
cool.
one more example before we wrap
Yeah,
up.
yeah,
The cost of freight. So to put one
yes,
container on a vessel from China to North America, it used to be, say, 2 years ago, the cost of was an average of
keep going.
3,000 to 3,500 US
Yeah,
dollars.
yeah, yeah,
At the peak about 8 months ago, do you know the
yep.
answer? Do you know the price?
I think it was about 25K
Yeah,
US
20 to
dollars.
25,000, but I think
Yeah,
25 was the highest price I heard, and
yeah,
it was just like, that's nearly a 10x increase, like from
yeah,
well, almost, right? Well,
yeah,
basically, if you may have back in the day found a cheap one at 2,500 and then had to pay the most expensive at 25,000, that is a
yeah,
10x increase, right?
yep, yep,
And so, yeah, eventually those costs get passed down. So that's the state we're in, the state of inflation that has run rampant over the last
yep.
pretty much year now. Um, one more final thought on my end. I know we've talked about recession. I feel, and again, I don't know this.
Hmm.
I'm not like a economist, or I'm not in the field other than just talking to people and getting the
Hmm.
feeling. But I feel like it will be a relatively mild recession. And again, that's
Yeah.
kind of going back to the point of the labor. How do you have a labor shortage during a recession? I don't understand. I don't understand that math, right?
Right, right, exactly. Yeah, we're in a recession, yet unemployment is 3%. It just it doesn't compute, right? I agree with you.
So, okay, cool. We'll wrap it up there. We're pushing an hour already. This has been a great conversation. If you're watching on YouTube or listening on any of the audio platforms, please be sure to click that subscribe button. And thank you so much to Kyle. You can find Kyle at Dividend Town on Twitter. And Kyle, anything else you'd like to shout out, like a newsletter or anything that you have going on you'd like to shout out, and any final thoughts before we wrap it up?
I got a visitor that wants me to wrap it up. No,
Yeah,
no, I appreciate the time, Dave. It's been a lot of fun. It's just gone by very quick. So
yeah. It's funny
I
how fast an
appreciate it.
hour goes by when you're talking to people.
Yeah, it was great talking with you, and hope to do it again with you sometime.
Yeah, awesome. Definitely, definitely will do. Thanks for coming on the Passive Income Podcast.
Of course. Have a great one.